This video is a review of Japan Tobacco's FY2025 second quarter financial results, covering the period from January to June 2025. JT is a leading Japanese tobacco company. Originally government-owned, JT was privatized in 1985 and now operates on a global scale. Second quarter consolidated results. JT's first half 2025 results were driven by tobacco growth and the inclusion of Vector Group sales following its acquisition. At constant FX, core revenue rose 14.2% and adjusted operating profit jumped 24.7%. On a reported basis, revenue grew 10.5% and profit rose 4.8%. Gains were partly offset by higher taxes, financial costs, and impairment losses from the transfer of JT's pharmaceutical business to Shionogi. Progress rate against revised annual net profit is 64.8%. Exceeding 50% progress at the second quarter marks a positive outcome. Tobacco business volume performance. In the first half of 2025, total tobacco volume rose 0.7% to 283.3 billion units. Combustibles grew 0.3%, while reduced-risk products, though still a smaller portion sales volume, rose 20%, driven by heated tobacco sticks. Growth was supported by Vector Group and solid momentum in EMA markets, though volumes declined in Japan and the UK. Plume products continued to expand, with new models showing promising early results. Tobacco business financial performance. In the first half of 2025, core revenue rose 11.5% to 1,052.2 billion yen and 14.9% at constant FX, while adjusted operating profit rose 17.56.1 billion yen and 23.1% at constant FX. Growth was driven by higher volumes from Vector Group, favorable market mix, and strong pricing, partly offset by FX headwinds and increased plume and supply chain costs. Tobacco by cluster. In Asia, JT gained market share in Taiwan and saw plume volume growth in Japan, despite declines in combustibles. In Western Europe, share gains in the UK and plume expansion were offset by falling combustibles volumes and inventory adjustments. In the EMA region, Vector Group inclusion, strong volumes in Turkey, and share gains across the cluster supported results. Pricing contributed positively across all regions, helping offset volume declines and higher costs from plume investments and inflation. 2025 forecasts. Upward revision. JT raised its full-year 2025 forecasts, driven by stronger tobacco revenue and easing FX headwinds. Core revenue is projected at 3,286 billion yen and adjusted operating profit at 862 billion yen on a constant FX basis, representing a 14.6% year-on-year increase. Reported revenue and profit are also expected to be higher, while free cash flow may decline due to the Canadian litigation settlement and higher working capital. Overall, the stronger tobacco business is driving the upward revision. Shareholder returns. JT raised its annual dividend guidance by 14 yen to 208 yen per share, reflecting the stronger outlook and its shareholder return policy. The interim dividend is set at 104 yen per share, and the payout ratio remains high at around 75%, underscoring JT's commitment to providing stable and attractive returns. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 4,877 yen as of August 20th, and the US dollar stock price is $16.13 as of August 19. JT's share price had been temporarily stagnant, but recently it has surged sharply. Current PBR is 2.13 and PER is 17.5. Dividend yield is 4.31%. As a result of the recent stock surge, this stock is relatively expensive compared to the past in terms of PBR, PER, and dividend yield. Conclusion. Steady tobacco sales and the inclusion of Vector Group drove growth in the first half of 2025. Total tobacco volume rose slightly, with reduced-risk products increasing due to heated tobacco sticks and plume expansion. Full-year forecasts and dividends were raised, reflecting confidence in continued growth and solid shareholder returns. Progress has exceeded 50%, indicating that overall performance is good.